computers now have primary control of critical vehicle functions. That's one small step for man, one giant leap for mankind.
All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Sorry for the just slightly late start. Wanted to basically just make sure that the connection was working fine before going live. So everything seems to be working well. I have no idea what yesterday's tech issues were, but hopefully solved. And yeah, no problems or no worries here today. And yeah, right, let's set ourselves up for what should be a very, very interesting day. Yesterday, right, very, very big volume, pretty impressive gap up, but or gap fill, but not really moving in a tremendous amount, right? Price action remaining just a little bit, I call it like inconsistent. I think maybe that's the right term here in the short term. And we don't feel like there's like a divergence between the potential from what we're seeing from like a chart perspective and a divergence between what's happening in some of like the leading economic indicators, or like tariffs or the reaction to last week's Fed. Kind of just seems to be in a little bit of like no man's land while we determine, hey, are we more likely to get towards kind of like that technical like story that's being sold, or are we more likely to get kind of pushed towards the like news narrative story that's sort of being sold to us? And as long as price action is sort of fighting between that like angel and devil on its shoulder, then I think we're going to continue to remain in it's maybe a little bit of an oxymoron, but in highly volatile, range bound conditions. So, what that means to me, right, is seeing like decent ranges, right? Decent moves that are occurring, but without any of those moves actually giving you like a high conviction breakout or a high conviction breakdown. So at least that feels like what the narrative is here in the short term. I would hope, or kind of like crossing my fingers that I get proven wrong, because identifying like trending price action here again today would certainly make my life a lot easier and certainly get us back towards having a smoother trading kind of experience. Now, not to say that the P&L or anything along those lines, um, it's just every now and then, right? Like yesterday, right? P&L wasn't perfect. Essentially a scratch day. It was like $9.60 per account. And I really don't think that it's going to be very impressive, right? Or always perfect, or that price action is going to make me want to feel ideal, right? It's never going to make me feel satisfied. The number is never going to feel like enough. So yesterday being the P&L that it was, no indication, right, of who I am or what I am as a trader. If I'm looking at my trades there objectively yesterday, I did a good job kind of protecting myself from max losses. I did a bad job in protecting myself from big wins turning into small wins. And if I can just fix one of those things, right, then I'm going to be in really good shape here to keep compounding away and keep kind of stacking up what has been a really nice kind of start to the year here so far. So with that being said, let's start mapping things out here a little bit this morning. Let's figure out what we want to do here today, and let's set ourselves up for what should be a relatively interesting session. So no, like 8:30 data here this morning, right? Pretty interesting. We do have 10 a.m. data. We got some Fed speak here at 11. We got more Fed speak here in the afternoon. And then just get force factory up. And then, yeah, fine. We got some Trump speaking here this evening. Oh, big. All right, cool. So what's the count here on ES? Good morning, everybody. Hopefully no tech issues across the board. Everyone's looking fine, sharp, and strong. And yeah, let's start mapping things out here and go from there. Yeah, what kind of 2 out of 3 is it? Yeah. Yeah, so it is with volume, right? That is spot on. How do you feel about the size of this gap down? Where are we approximately getting stopped? Maybe stopped, not the right term. Where's price action bouncing or kind of holding above at the moment? Yeah, yesterday's close, exactly, right? So very interesting kind of area for price action to maybe be settling at. Would like to see if we can get back up above, right? And then push up and break new highs. But a good spot here for it to find a little bit of conviction. 59.50 seems to be I don't know, maybe you're getting, I don't know where you're getting that number from, Norm. Okay, okay. But yeah, we're still going to be looking, right, for a move up towards sort of like that 60-70 handle. That's really going to be today's starting point. So with volume, we're not going to put too much stock into that. I think still worth having like a two-way shape here. We'll go 60-50, 60-60, 60-70, right? Approximately pre-market high. And then you're going up towards, we'll say 61, just to keep the numbers easy for us here. So the downside, right, we're targeting 59.90. And again, right, have it pretty much mapped out all the way down to yesterday's lows. We'll call that 59.30. I don't know too much more than that. Cool. NQ. What's the story? Similar, not so similar? Yeah, very similar story, right? Kind of holding that same kind of previous day close, right? Kind of still looks a little bit like consolidation. Again, 2 out of 3 here to the upside with volume. Not the strongest daily candle, right? So I will have a little bit of flexibility to play this in either direction. Opening up essentially in the middle, right, of our range of consolidation here too. I don't think that's particularly a surprise. So this idea that we can have a bit of flexibility in either direction, I think is an important distinction here today. And we're targeting 21.6. We're at 21.4, so that's fine. And we'll go up to like 22. And then to the downside here, right, targeting pre-market lows, we'll call it 21.2. And then down towards sort of that 2,500, eventually 100 points along the way. Cool. Okay, CL. Red candle, increasing outlier volume, big gap down, 3 for 3 here to the downside, right? Interesting. On yesterday's 3 for 3, technically, right, showing me some bullish characteristics. Higher high, higher low. So maybe a little bit of a fake out higher above that range, now breaking down, maybe thesis. I'm going to go NA on a bull case here regardless. We're at what, 71-ish. So we'll target down towards 70 and then maybe like 68.50. We'll go then 69.50, 69, nice, 68.50, and then that's plenty of space. Yeah, I don't think I need to do anything else crazy besides that. All right, Apple 3 for 3. Sorry, 2 out of 3 without volume. So we're all looking for basically a gap fill, DV reversal type setup, or a breakdown here under 226. Tesla, red candle, increasing outlier volume, gap up. A little bit of a failed breakdown here, maybe. Wouldn't be surprised to see this go bottom up gap fill. So weak, 2 out of 3 volume. We're going to call this a bottom up gap fill, right? Then to the downside, it'd have to be a breakdown now under, what was that, 374? Cool. Microsoft. So 412.17 here. Holden. So 1 for 3 here. And you're looking for a breakout then above 415 or under 409. Cool. Okay, Amazon. Got a little earnings indicator here popping up. That's on Thursday. Let's see if we can have like a Palantir-esque type earnings report. Maybe flag in a little bit. We need to get up and over 240. Still have a little bit of time here before the earnings. I'd be not wanting to swing this, but could be setting up here. And then because it's 3 for 3 to the upside, I have no interest in a downside narrative here in the short. Okay, AMD. It's got earnings today, so not going to bother with playing this at all, right? It's not going to be worth the stress. So we're looking. Count wise, right? 2 out of 3 without volume. Cool. All right, NVIDIA. 1 out of 3 here to the upside, technically gapping down 16 cents. So we're still going to look to finish filling that gap. So we'll call that like a 118.60 breakout. And bottom up gap fill makes me laugh every time. And then to the downside here, right, have to be either like a gap fill rejection, so like a 120 rejection or a breakdown under 113. Cool. Sounds good. Hope you're having a good day, man. Hey, Meta. Money printer go burr. This thing is incredible. 3 for 3 to the upside. Trying to think of what the right level is. I don't know if it's 705 or it should be 710. I'm going to go 705. Targeting 710, right? So we'll go towards. Right, and then no real downside rejection here that I'd be interested in. Okay, Netflix. Doji increasing volume gap up, so we'll call it a weak 3 for 3. Still needs to break out from this range. Doesn't seem to want to do that, annoyingly enough. But yeah, let's see if it's got the juice here at some point. Okay, Google earnings today as well. 2 out of 3 without volume. Okay, and then yeah, I'm just gonna go NA. I have no feel for how earnings is gonna go. But yeah, just not gonna play these tickers into those sort of things. Not really my edge. All right, and then VIX hanging out 18.07, so still elevated, but lower than what it was yesterday. So probably tells me a little bit easier for bulls to be in control than bears, but we're so close to those quote unquote extremes. And I'm doing like the Austin Powers air quotation marks when I say that. We still got a ways to go right before this is technically like a pretty crazy VIX environment. We've been very, very low VIX for a long time here. So we'll see if we can get some sort of change, right? But we were in the 20s constantly, right, for a couple years. Now we're kind of in like the 15 to 19 range, maybe 13 to 19 range, and not really getting any significant amount of like volatility. I think that's what's also making it easier for us to get these like quote unquote rug pull candles. But yeah, now I'm ranting and raving like a lunatic. So yeah, any questions here, team? Everything makes sense this morning. Awesome. Well, I spent 45 minutes here shoveling the driveway to start the day off. So I'm just gonna go make myself a quick cup of coffee, maybe stretch a little bit here, and I'll jump back on in a couple minutes, and we'll do a quick little rundown here as the day is getting ready to get started. So we're back at it again in a couple minutes here, team, and we'll chat then. doing well. Everyone feeling sharp. Everyone ready for what should be hopefully an interesting trading day. Okay, let me take a look here. So it just seems like the price is probably the only thing that's kind of cutting off. Let's see if this. Cool. So you can see ticker right top left hand corner or on my screen here. And then price is quite available here now as well on the right hand side. With the red price, right, being my price. I'm not sure what you mean by price and timeline at the bottom. I'm not sure what that means. Anyway, let's get ourselves honestly set up for what should hopefully be a very, very good trading day. And yeah, hopefully we get a decent amount of volatility here today. We got some 10 a.m. data. It might be a little bit slow until then, and a relatively volatile pre-market session. So let's basically see, right, where either enthusiasm shows up. Oh, okay, yeah. You can find a way to bring up the clock. I removed yesterday, I moved the music, and I removed the clock when, back here. Can't seem to find it in my settings here. We'll figure that out later. Why would your stop loss be wider if you have more risk? Why would you increase it? I'm confused. So no, my idea here, right, is that I always want to be risking $500 per trade. So from where I want my entry price to be to where I want my stop loss to be, how much am I risking with a singular contract? If that's less than $500, I can look to buy a second contract and see where I jump in, right? So if I'm risking 12.5 points, for example, on NQ, then I'm risking $250 per contract. So I could buy 2 contracts and still be within my max risk number. If I'm buying 2 contracts and I'm keeping my stop loss at, we'll say 20 points, well, now I'm risking $800, and I can no longer purchase 2 contracts and be within my max loss number. So buying more contracts would not allow me to increase my stop loss or to make my sizing wider. That would be counterintuitive to what my risk management plan is. All right, so far so slow here. Not great second candle volume. Okay. On this second candle of the day, what would it take for us to call this current candle or the second candle of the day a fake out? But where would it have to close under? And where would it close above to say that it no longer isn't a fake out? Yeah, under what though? Under what? So what's the specific point that I'm looking at? So where's like my line in the sand? Either it closes above this or it closes under. Yeah, so I'd be looking at either closes above the opening range, right, or inside the opening range. Same thing here on ES, right? Either closes above or inside. Looks like it's going to close above, right? Pretty strong close. Right, so anytime I'm trying to do analysis, I know it's kind of like a lazy example, but I'm always trying to be specific, right, with what I am looking for. The more specific I can be with my definition of what price action needs to behave like, the less anxiety I'm going to feel, right, when price action either behaves that way or it behaves opposite of that. So I want to be specific. I want to be precise, right? I want to be deliberate with my language so that I'm not being opaque. And by being vague or being like wishy-washy with describing PA, all I do is I allow my emotions to take over. So if I'm greedy and I'm not super confident in what my A plus setup is, I'm going to talk myself into thinking that every trade is an A plus setup or every bit of price action is an A plus setup. If I'm fearful and I'm not quite convinced over what strong price action is, then I'm always going to be talking myself out of trades and not having the courage to take my ideas. So the more specific we can be, right, easier it is for us to maintain control over our bad trading psychology. So that's why for me it is so important, right? I tend to rush or feel impulsive or feel stressed out in a trade when I am missing information or making decisions with incomplete information. Oh, how do I counteract that? Right? Well, I counteract that by being ultra specific and yeah, basically don't allow my mind, body, soul, whatever you want to call it, right, wander into the realm of I don't think what the right term is, but it shouldn't be like foggy, right? My version of what an A plus trade shouldn't be foggy. I should be able to see through it. I should be able to do all those variables. And I do that, right? I gain vision by being specific in my analysis or in my interpretation. And then either it happens or it doesn't. And if I'm specific and I do the same thing every single time and it still doesn't happen for me, well, then I know, okay, maybe I need to change something in my process to catch more ideas or to catch more trades or do whatever. And for those of you who've been with me here for a year plus, you've seen that process occur. But we want to be very consistent in our approach, very consistent in our execution. Then we can realize the habits that make us money and the habits that cost us money. That just sets you up ultimately long term to be very, very successful. What a crazy candle on CL. A little bit mental. All in 1 minute. Huge volume, Igor. You're correct. Yeah, so I'm just defining, Erica, what's the point where I want to see hold. So in general, right, that is previous candle high or previous candle low or like high of day, low of day, high of opening range, low of opening range. And either it's going to close above that specific price. So the high of the opening range, right, is a specific price. High of day is a specific price, right? High of candle, low of candle is a specific price. So I want to see what that price is. And then either it gives me 229.75 close, or it gives me a 29.25 close, right? So it makes that result one or the other. And I want to get my analysis to a point where it's that clear, right? Either it's on this side of the line or it's that side of the line. So I always want to make sure that I'm defining what that line is. That isn't, oh, this feels like a fake out, or this is. No, it's a strict definition. Either it holds above my target or it holds under. And that's it. Okay, so maybe getting a rejection thesis here. Excuse me, I got a frog in my throat. Does that make sense though, Erica? Yeah? Perfect. And then it's the same thing when we're looking at our entries, right? We want to see price pull back into a specific area. We want to see it find support at a specific area. And the stricter, right, we can be with our definition of what that means, easier it is for us to wait for that reaction, right? If I'm waiting for price action to feel right, I'm always going to be waiting or I'm always going to be rushing, right? We've all experienced that. We've all kind of felt that in our pasts. So I want to counter that feels right or feels wrong with, okay, I want to see price bounce off of 500, or I want to see price bounce off of 1,000, or whatever it is, right? Like the actual number in itself is not really that, it's not the important thing. It's having the magnet basically that you want to see price action move towards, and just saying, okay, I'm looking for a reaction at or above this price or at or below this price. and you can create those expectations for yourself, right? Over when you would expect to like get an entry. You can like start to refine it so you don't feel that anxiety at 492, right? You're not looking for an entry at 492. You know you're looking for an entry at 500 or better. You can just like you can shape your mind, right, into avoiding your anxieties. Okay, right? We'd be looking here for a possible fake out scenario above high a day. So that red line. We got fake out 1, right? Closed above our previous high a day. Fake out 2 would be a failed move above and then a pullback back under. This could set up very quickly here, right? So I'm getting everything going. It would be a sell order. So what we're looking for here, right, is for price action to make a higher high above this red line, then break down under, and then slowly creep back up towards it before selling off. And so we want to look to enter our position short on that slow creep up after it's made a higher high and then pulled back under. So we kind of want this to work like a well, I don't know what it's called. You ever seen those like on in movies when it's like a physicist? You always see like there's like the 4 or 5 like balls on a string and they push them all in one direction and they just hit and keep bouncing off of each other. I don't want that red line to behave that way, right? Where it hits at 31. Yeah, pendulum. Okay. So hits at say 31, right? Sells off, goes back down, then gets hit right at 24 and sells off again. So I want it to behave like those balls bouncing back, right? Going, stuffing, and then dumping. In my ideal entry time, right, is when it smacks. Right? So when I see that it's like, yeah, at its limit or its perceived limit. Can't really do anything with this. So I only have a setup here on CL to the downside, right, today. It's trending price action here lower. I can't really do a counter trend trade here yet. Still looking for this fake out scenario. This is going to be my best bet. Is short term. Again, still looking for this fake out. Yeah, likely you have delayed market data. So watching here closely, right? Watching here closely. So if you have delayed market data, there'll be like a little D around the CME symbol. Click that and sign up for the correct market data subscription. You're going to be 10 minutes behind on the price if that's the case. Still hasn't gone up above that red line. Okay, there it is. Now we want to see it sell off back under. Otherwise, we know we're looking for that breakout scenario. And not really giving us that fake out opportunity here. Wow. Okay, so now we have increasing volume. Oh, where's it going to go? The difference between 48 and 24 is 24 points. It is in play theoretically. Okay. Now we want to see a gentle pullback. Let's wait this candle close. 9 minutes till data. All right, let's see if I can get it. Targeting low of day here. And watching. Right. My restriction here on entry is based on a max risk number, not a risk reward factor, right? I want to make sure I'm within 25 points of that 49. Okay, guys, I am in average price 523.50. Not the best fill on that. Gotta survive. Come on. I just got stopped out. Okay, we'll try again here. First loss was a little bit shitty. So now we're looking for a possible breakout trade, right? High volume breakout through high of day. Targeting our 2R range. We'll call it 600. Okay. Stop for now, 544. We want to see previous high of day, right, act as support. So we're looking for now a gentle pullback right into this area approximately. Under 57. Has to be under 57. This could possibly be 2 contracts here. Watching carefully. All right, guys, I am in 552. 2 contracts. Let's see if this thing can go. And so far, so good here. So far, so good. A little bit of a better reaction than my first trade. Let's see if it's got it. Come on. So we're looking, right, for this candle to close. Strong candle shape. Hold high a day, right? And ideally strong volume. We're unlikely to get strong volume. But good continuation breakout here, right? Holding strong candle shape. We'll be able to hold this thing out for a little bit longer. Now, I'm going to apply a bit of a shot clock to this. We're going to want to close this within a few minutes, right? Or a few seconds, I should say, of market data at 10. So I'm watching this carefully here, thinking about maybe getting out of this position, taking a small win. If I can get a good fill. We got a minute. There's a nice pop. All right. 720. All right, I'm going to take it here. Closed at 573. Closed at 573. Nice trade there, team. Well done. All right, much better. A good decision by the looks of it, right? Good decision. Hopefully you guys all got out of that as well. Nick, I was long. You can see the setup alert here. Was also shared. Also wrote out my position on the screen. That in NQ long at 552. Two contracts. Stop at 544. So I will always share my trade that way. And then you'll be able to see my Fibonacci's, right? That map out my entry. So red line is my stop loss. Right? Anywhere under my green line is my entry. White line is my profit target. No, I took a previous trade that was short. But if you look in the Discord, right? 957 NQ long, 552, two contract stop, 544. So, okay, now nicely green here on the day. 315 bucks, right? That's what, 1,000 times more than I made yesterday. So that's good shape. And okay, right, caught a nice little move. Puts us back green. No complaints. Well done, Kiki. 600 bucks. Let's go. All right. No complaints here so far. Nice little green day. Yeah, unfortunate we started the day off with a loss, but hey, that's the way she goes sometimes. That second trade, right? No reason why that shouldn't have been bigger than your first play. A little bit more than 800 bucks on that trade. Not bad, right? So just about 500 on the first, plus 800 on the second. Math is mathin'. Beautiful. Kind of impressed with indexes here so far. So above that 600, if we can get a hold above, I'm not going to get it on the 3, maybe we can get on the 5. If we can get a hold above 600, then we can start to target 21.7. Let's go, Rusty. Congratulations. How many contracts? Hey, not bad. An entry price of what? You got like 50 points out of it? So let's see if NQ can hold 600 now. Beautiful. So 47 points, one contract. Hey man, that definitely buys a couple bowls of ramen, that's for sure. Yeah, so let's see if this thing can hold 6. Get close. All right, it did. So now we're targeting a move towards 21.7. All right, so long. And let's see this thing. I mean, for now, it needs to still be a aggressive entry technique. So stop loss would be 593, and we're looking for it to break out. We'll make this line blue. So it needs to break out above this blue line and then find support off of 606. So I know that my entry would be approximately 606 or lower-ish with a stop loss of 591. I'm going to set that up now, right? I'm going to start to judge how many contracts can I buy here. That means I'm buying one contract. Watch. Can't really see it go too much further under 600, right? That wouldn't be great. Still, no entry here yet. Has not respected that blue line. Not a correct reaction here yet. Gotta say, second day in the setup. It feels so good in here. Oh my gosh. An epic snowstorm yesterday. Looking good. All right. So, Deb, there's two chats. There's a Discord chat that people will use for those who are in the Discord. And then there's a YouTube chat for people who are using YouTube. Okay, so I'm watching here, team. I am watching. I'm looking at one contract, and it has to be under 15, right? It has to be under 15. All right, because 15 to 90 is 25 points, right? So that's my $500 of risk. I will not take a trade and exceed my max risk number. No compromises there, right? I will refuse to compromise on that. And if it gives me an opportunity, maybe I can jump in here on a shorter time frame or right on the 10 min. Either of those are still in play here. One second to go. 549.55, just under. Then, right, if we get the 10 min set up here, we're targeting a move towards 760, 2 times whatever the size of the opening range is. But we should have the opportunity to be able to trade this. And we're going to look for that 48 area approximately to act as support. So 47.25. The stop loss here at the moment of, we'll say 35, right? So approximately 10 points of risk. Got to get above that blue line first. Treat that as support. So that's 47, right? Okay, so it's above. Let's see if it can gently pull back here now. Okay, so I am in 650.75, 650.75. One contract here, right? $10 min time frame. Hmm. It feels like it's lost a little bit of its juice here post entry, right? I feel like this is moving the right way. Okay, so I closed that trade. I'm out of it. Took the stop. And now it's faking out. So we can try this again here. Yeah, I should have cut that trade just 30 seconds earlier. I didn't do that. I should have. All right, we'll potentially try this again. Going to be a one contract play. Maybe this is now a rejection here on the 5. Okay, let's look at this as a possible rejection scenario here now. Third largest volume of the day, 10:15 in the morning. I thought it was going to be later than that. Okay, so let's watch this thing short here. Targeting low of day. Watching that reaction around basically 40, right? That's where the wicks start, which is why I'd be looking for a rejection there. Otherwise, I'll get the aggressive technique where I can look for a breakdown here under 20 and use that as my entry price. We'll call this 59. All right. Come on. Close. Okay, there's a little wick above. An entry. As is, right? I can't quite do this. I'm risking more. So now we're looking at this. 42 stop loss. $22. A little bit too fast. A little bit too fast. Yeah, didn't really respect the blue line, right? The thin blue line here, if you want to use your propaganda terms. Okay, still watching, still watching. Still nothing here. A lot of work today to be up $61. $47 to $13. Even if you push it up a little bit to like 15. Hard to get the appropriate entry. Maybe I could do the fake out technique again here. Okay. Stop loss for now, blue line. All right. Got closed under this blue line now. Didn't, not a fake out. Didn't, not a fake out. Okay, increasing volume here again on this 10 min. We're back in business for a long. And we expect for it to find support off of blue line. So on the pullback technique, right? 45 to, we'll say, 15. I'm risking 30 points, right? I'm risking $600 on that trade. Can't really do that. It's not an appropriate entry. Maybe off of 38, so the close maybe make a little bit of sense. And then, okay, I'm risking 23. That's less than 500. I'd be okay with that. I see there's a lot more glare here than at my previous spot. Difference between high, say 63, 34. Again, 30 points. All right. Let's see if we can keep pulling back into that 38 area again. Just missed it. Oh, that might have been the entry. Okay, still watching. As is, right? This is about $540 of risk per contract. Too much, right? It's more than 500. That's probably the, well, I don't say the only reason, but that's the main reason I haven't clicked submit yet. Okay, here's a possible chance. Too fast of a pullback. All right, far too fast. That doesn't feel like it's finding support. Any issues with YouTube here today? The blue line is where I want to see price action find support for my entry, Erica. So when I'm watching price pull back, I wanted it to basically bounce off of the previous high of the, or close of the previous candle. Okay, so my internet speed is good enough then. Maybe do this. ES instead. Walk away, Sammy, right? So if it's not showing me support at my zone, I have no interest in trading it, or I need to wait until it establishes support there. We could be back. All right, so it's back up above. You want to see a gentle pullback into that area again. Yeah, missing 8 points, 4 points. Not going to lose sleep over that. So again, right, we're watching for it to find support off of the blue line. That was better. We've got two problems though, right? It needs to find support off of that price, and it needs to pull back into the point where you're risking 500 bucks. Right now, the $500 and that point is approximately the same spot. So that makes it a little bit challenging to get a good entry just because you have very little range to play with. So I have to be patient here. I have to be patient. Okay. I'm in 38.25. 38.25, one contract. Let's see if it can go. So far, so good here. They can break out through that 50 and make a new high. So far, so good. Again, right? Being specific on that trade has made it easy. Well, easier, I should say, never easy. I don't want to count my chickens. Still on an inside bar here, but I'd like to see it hold 650, right? Uh, 2 minutes to go here on this candle. Come on. One. Come on. Come on. Come on. Come on. Gotta hold 50. Struggling a little bit at that zone. Just a little bit. Feel like it's going to hold it here. Hmm. Come on. 20 seconds. Oh. Come on. Okay, guys, I've closed that trade at 42. Closed that trade at 42. Did not hold above my entry price. Take the quick little win. Try again, right? Didn't quite behave strong. So, okay, good decision. All right, made $20 on that. Monster. Sorry, $40. Ramen on me, team. Ramen on me. Again, we can reset this thing, right? Try again. Funny day. A little bit of deja vu to yesterday. A little bit of deja vu, where it's like we're 2 for 4, but it's a negligible P&L day here so far. Okay, we're back in business, right, for a possible reattempt. And again, I don't think the mistake here was closing this trade early. I think that was still the right call. I think probably once it was a bit more obvious that 50 wasn't going to hold, instead of closing it at 42, if I closed it at 47 or 48 or 50, okay, it's a little bit of a nicer day, right? But I tried to give it as much time as I possibly could have. Maybe like a little bit of hopium with that. And that probably cost me, $150, something like that. So it's funny, right? I like to say that out loud because I can remind myself constantly that basically every time I get hopium on a trade or I feel like something is going to move in my direction or that I'm going to be correct, I'm just early, I'm going to be correct. I actually usually end up costing myself money with that emotion versus making myself money with that emotion, right? Like, ooh, I'm so close, I can taste the finish line. Usually that cost me more money than it makes me. So again, right? Resetting, reclaiming your mental capital, putting yourself back in a situation to be green. Cool, right? We're still stacking up little baby wins here today. 2 for 4, one good size win, one good size loss, one small-ish loss, one small-ish win. So we're still just playing. Well, we'll keep resetting until market's done and dusted. But again, have not missed out on the move here yet. So we're okay. How's everyone feeling? Good? Not so good? Green? Not so green? Where we at? Perfect. Good. Good. Green days. That's fantastic. Hey, Matt, that's call that break even. No worries. So Cabo, right? Good reminder then, just like I kind of explained, like saying it out loud to yourself that, hey, every time I fall in love with my position versus fall in love with the process of managing my position, cost myself money. Big wins happen from a consistent and repeatable process, not by swinging harder, right? Or by like crossing our fingers harder and white knuckling through. Tends to just cost us money. I'm yeah, impressed. Okay, if we get a breakout above high a day, maybe we could do something like this. 63 to 34, though. Similar issue to what we had 10 minutes ago, right? Where you need to get almost a nearly perfect entry, otherwise you're risking more, right, than your max loss. I might have to just wait for this to get tightened up just a little bit. Still no rush here to do anything crazy. A lot of decisions, right? 4 trades here so far. And again, I can't imagine how maybe anxious I would be is the right term over holding right through this move. So having to have survived 2, near pullbacks, right, within 3 or 4 points just to now be green, I think I'd probably be panicked closing this trade, right? Not behaving as smart as I could. Okay, maybe we're back here on the 3. For the 10, because the 10's giving me range to play with still. Go shorter time frames, not so much. I have to target 700 here, right? Which is very tight. Let's see, 30 seconds to go. So we can go increasing volume here. All right, so maybe not on the 10. 1 sec here, guys. I'm getting a phone call. Hello? Sorry about that. Bad timing. Still hard to get the risk reward here. It'd have to be a pullback now at 69. Yeah, unfortunately, Jay, they do. Every broker, every prop firm, all these companies will occasionally have glitches like you're describing, but I've never seen them punish traders for that. So glad to hear that they're doing the right thing for you. So again, right, still looking here. Stop loss would have to be 59. Pretty tight. Looking at possibly 2 contracts here, maybe even 3. But so far, pulling back far too quickly. Have any double fake outs anywhere? Not yet. this. Again, so far, so chill. Okay, so possibly fake out one. Now you'd want to see fake out above current high a day. All right, and then break down. It's not on increasing volume, so it has to be a fake out setup. Thing here on the old ES. A high volume separation away from that high will also be tradable for us. Hard to call these recent candles, though, as anything close to high volume. Okay, so we have a chance for this to go. I can get it towards like that 10:30 candle standard. Pretty good. 40 seconds to go here, so in play for sure. Y'all may be giving me that opportunity for a pseudo rejection. Well, right, which would give me that like mean reversion setup, which I love. Close. Against me increasing without being mega. Now let's watch CL. By far the best, especially if we can hold under 73. We're going to be targeting now low of day, right? Which is a pretty aggressive move. Yeah, stop loss at 23, probably a little bit too much. 22, probably a little bit too much. So maybe around that 12 area. We've seen basically price action be wicky, right, in that zone. Otherwise, we need to wait for the aggressive techniques. We go stop loss at 10. Entry at 96. Even that's still a little bit larger than maybe one would like. Man, the glare here is killing me. Sorry, it's a me problem. So stop loss for now, 73.09. And you're looking at 96, right, as your entry. So you're looking 3 contracts. 4 if you can get a 97. I'm going to look for a 97 entry instead. So let's see if we can find now support, right, on a breakdown off of that blue line. So a little flush under and then a gentle pullback into that area. That's not gentle. Try again. I'm not gentle enough. You're gentle, gentle, gentle. Better. Okay, so now we want to see it. Come on. Otherwise, I have to size down again. I don't know if I'm opposed to it. Come on, got close. It's on 96. Okay, now we're doing this. Stop loss at 96. Goes 6 contracts here. And you're looking for a gentle retest here of that blue line and then a breakdown. Quite ready to pull the trigger here yet. And we want to see a gentle retest. On. I'm back to 5 contracts here now. Come on. Okay, now 4. For a gentle pullback. Come on. Okay, and I am in at 84, 72, 84, 4 contracts. Short, right? Maybe could have gone a better entry. Didn't wait it out. A couple times now would have given me that 90. Got to die. And not a super strong close. Come on. Oh, yeah, not a perfect entry there, if I'm being objective. 82. Let's see if we can keep breaking down. Could have got bigger sizing, could have spent less time in drawdown, right? Both of which are better than my current predicament. Flush. Otherwise, got to get out that break even here. Come on. Come on. You can do it. You can do it. Like it wants to get under that 82. Well, inside bar, probably not perfect. I'm watching very closely. I'm going to see if I can get out here at some point. Watching this very closely. So if this doesn't make a new low of day and hold it, got to get out. Just made a new low. Come on. Come on. Flush, 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 baby. Okay, much better here. Much better. Now 74. All right. All right. Whew. So we'll not let this trade go red. Honestly thinking about closing this. I feel both a little bit right, but also a little bit wrong. Yeah, absolutely. They saying that in Step Brothers, I would have lost my mind. There's 670. Come on, a little bit more. All right, at least this thing is starting to move here. But yeah, I think bad entry. Even though it has been a good outcome, there's 800. I'm going to look to close this here now as my P&L is increasing. This move is happening pretty quickly post flush, but not a tremendous amount of volume. And I'm hyper paranoid of not closing my trade as my P&L is growing today. So watching here carefully. If I can get a little flush under 60, I'm going to look to get out. I'll be close to $1,000. Come on, baby. Get that little flush here now. My finger's just on the trigger across the board. Give me a little bit more. Come on, come on. There it is. Oh, I should have pulled the trigger. Didn't. It's decent volume. Got to hold though. I don't like this pullback now. Nice work, Chris. Hey, 250 bucks ain't bad for one contract. That's pretty nice. Moved late last candle. See if we can get it again. I do feel like I missed my take profit though. Bothering me. But maybe I get another chance here. Come on, get under 60. You could do it. Normally, this would be enough separation for me to want to start to pyramid into a trade. But I'm a little bit fearful. Maybe not fearful is the right term. But I'm apprehensive to want to be hyper aggressive here. Just because I haven't seen price action necessarily move super smoothly. So what I don't want to do is build up my position, get a pullback towards my average price, get stopped out, and then the move keeps ripping lower. I don't really want to deal with that. Like, this is going to turn into a nice day here. We can get just a little bit more oomph. Let's see. Watch closely here. Oh, come on, come on, come on, come on. All right, sweet. So I am out 56 fill price, 56 fill price for 11.20 on that trade. Beautiful. So probably again, right? That trade should have been a little bit of a better entry. My entry sucked relative to what it could have been. I could have gotten maybe 3 more contracts, 2 more contracts on a better entry, and that would have been an extra maybe 600 bucks in P&L total. So that would have been a much, much better result. So if I'm looking at this objectively, although it was a good trade, there's still things here I could have done much, much better. So I'm happy to be green, right? It's a pretty nice day here now. But I still feel a little bit, I don't know if sloppy is the right term, but I feel like I feel naked without my notebook. I don't know, maybe that's it, but that'll be here today. And yeah, okay. I think that was a good decision, all things considered. Good trade. What happened, Norm? Did you not catch this trade as well? So what made you feel like it was the right time to close? Besides P&L, what made you feel like it was the right time to close? So 3 for 5 here on the day. Not bad. What was your stop loss set at? It got about halfway to the stop loss, never really above. And then how many contracts did you have? Okay. And your entry was what? 84. Okay. So the same as me. In your journal today, right? I would think about writing down why you felt like it was the right reason to get out of that trade early. And how next time you can think about differentiating between an early result versus or early entry versus a bad thesis. If you didn't like how your gut feeling was on that trade, right? Which happens. Train your gut to be better. So that's fine, right? So in your journal, right, you write down, okay, the previous trades made me felt like this one wasn't moving in my direction right away. Having the wrong entry made me feel as if I wasn't, right, in a good spot to make money on this trade. If you're then feeling as if your entry isn't perfect, I would rather you cut your trade right at 82, 83 before it retests instead of once it's gone up, right, and then broken down. Because if you've survived your worst case scenario, right, on a trade, and hey, okay, it pulled up, it maybe you tried to get close towards your stop loss, but then broke down again. That's not actually telling you that the opposite side is strong, right? Telling you that, okay, maybe you're a little bit early and their thesis has failed too. So then that could have been your opportunity, right, to get an entry price then at 89, 90, whatever it was. But if you survive your worst case scenario and it goes above your entry price and then pulls back down, what else bad can happen, right? Kind of nice to make money trading CL every now and then. Okay, but if bears were strong, right, would they have pulled back, failed to break out again, and then reversed higher? Or would that have been kind of like an outlier move? Right? You felt like your entry was early because it pulled back, or like you didn't like your P&L pretty much, right? So how can you trust, right, that your idea is correct without thinking about P&L? Now I know easier said than done, and I get that, easier said than done. But that's what we want to be asking ourselves here now once markets close and go from there. And then the other element, right, is okay, in the trades beforehand, you kind of have identified for yourself, hey, rough day, made a few mental mistakes, right? And you've lost more than you should have. So you've already admitted previously that, hey, maybe my mental capital isn't where it needs to be. So then instead of taking that next trade when you're burnt out mentally, probably not a position, right, where you should be continuing to trade. You made the comment to me last week, right? We were like, oh, I noticed that, hey, after a pretty choppy trading day, you sounded kind of burnt out, right? And you said something along those lines. So you have to be able to notice those same feelings in yourself and being able to walk away. And the amount of trades, how many of those were yours? Okay. You think those decisions were born out of tilt? Or was there something else behind them? And I don't, I hope I don't feel like I'm calling you out or anything along those lines. Hey, Rajat, congratulations. $1,000 on the day. Well done. It's a fantastic first day. And I think one of the hard things in trading is just getting comfortable that you have to be proactive, not reactive, right? So once I'm no longer feeling my best, once I'm no longer feeling my sharpest, then my biggest fears are going to dominate my trading decisions. And once that occurs, it's a little bit easier to make mistakes, right? It's easier to not look at price action objectively. It's easier to confuse this with that, right? That with this. And you get like a little bit of an emotional whipsaw. So I want you to think about what your trigger is, put you into that irrational state, because we all have one. I don't mean this as like a call out, but we all have a point where we lose our ability to be disciplined and structured and logical. So I want you to think about what's the feeling before that happens and what is the lead up basically to that feeling. So that when you start to feel that build up, instead of going left and continuing down the irrational path, you can kind of snap yourself out of it and reset and refocus. Okay, maybe here missed 8 cents of move so far, but that's fine. If this gives me another high volume breakdown, I can look for further separation. 74, probably a little bit too late on this now. I gotta do something about this glare here. What was your stop loss, Antonin? So why'd you place your stop loss at a different price than the high or low of your confirmation candle? Like, we want our stop loss to always be placed in the point where our trade is invalidated, not where the P&L hurts, right? We want the point where our P&L hurts and where the trade is invalidated to be the same point. So if you want to get tighter risk, right, buy a deeper pullback. Don't creep your stop loss up. All right, don't push your stop loss closer to your entry price. Yeah, I think that's spot on, Mike. For sure, Antonin, but that's not the point, right? Is we don't want to be making up our stop loss price. It should be the high of our entry candle, the low of our entry candle, the high of our confirmation, the low of our confirmation. We shouldn't be arbitrarily putting it lower or higher based on a feel. Right? If we want to lose less and we're focused on the numbers, cool. Buy a deeper pullback. That'll accomplish the same thing while making sure that you close your trade, right, when you're wrong, not when it hurts. Guys, and if you don't like the risk or you don't know what the risk is or you don't know things along those lines, ask, right? I would much rather try to help you solve those anxieties before you enter a trade than trying to solve them after the trade, right? Again, we want to be proactive, not reactive. Learning is having a feeling, an emotion, a sensation, and changing your behavior once you experience that. So if we're only trying to ask questions that we can change our behavior in hindsight, we're not really learning, right? So when it comes to learning how to manage our emotions, it's making sure that we're setting ourselves up so that we can be proactive, not react. I keep using that phrase, but it's the best I have, right? Is so that we learn from our mistakes before, right? We've seen the pattern in our behaviors. Now we can change our behavior and do something different. So if there's something in a trade, something in a setup, something in the position sizing, something in the entry timing that like you feel like you're missing, please ask that question, right? This is what I am here for. Means two things, right? One, if you have a question, it's very likely someone else has that same one. And two, right, if you have that question, then I haven't explained the trade well enough and you don't have that clarity. So it's also a me problem. And for sure, sometimes I will find scenarios where, yeah, maybe I'm not being as transparent with my thinking as I can be or should be. So I want you to call me out on those situations, right? I want you to be selfish and solve your problems before they become P&L problems. So that's what my job is here, right? My job here is to speed up your learning curve and to share with you my thought process so that you're not wondering why, how, what, if, right? Having those questions answered. And it's my job to explain those processes, explain those ideas before I enter the trade. And selfishly, right? If I haven't explained them well enough, then either, right, I'm rushing my process, or I can also get better by thinking about how else I can describe it using different language so that the point gets across. But I don't want to see people taking trades without having an understanding over the things that give them anxiety. As for indicators that I use, so you can see here on my chart, I've got Bollinger Bands. I have like a custom fake out breakout technique. I've got VWAP because people ask me about it. Volume, and then I have my opening range indicator, which is this one here. I would say that I primarily focus on candlesticks and volume. I don't really rely on indicators. I use them more as like setup triggers and then use candlesticks and volume as my confirmation setups. If you want to get your chart to be exactly like mine, inside the Discord, there is a section there. Either the DTR indicator, right, that tab, or under the FAQ section, how to access all services. You can bring up my charts so that yours look exactly like mine. Because I want this to be a social contract with us all, right? So if you feel like I haven't explained a trade well enough, I don't want you thinking that you can't ask that question because I'm going to get bitchy or annoyed or whatever. That's a me problem, right? That's not a you problem. So I would much rather you be aggressive in getting the information you want and to be selfish in that pursuit of knowledge, right? When I was learning how to trade, I sat down, I've said this before, I sat down next to a guy named Steph, and honestly, I just annoyed the living shit out of him and asked him every opportunity, right? Every question, everything I could think of, and drove him nuts. And when he got mad at me, because I was being too much of like a Jack Russell Terrier in his ear, I had to smell his garlic breath. I had to deal with his wrath. I had to be worried that I was going to lose my job. But you know what? He wasn't getting mad at me for wanting to get better. He was uh, getting mad at me that I was probably asking questions that he wasn't like confident on how to answer them, right? Like yeah, like he wasn't. I don't even think he was getting mad. I think it's just a stressful job and it's not easy. And my perception was that he was getting annoyed, right? And that he was getting frustrated. And I thought that that was the slight on me when it wasn't. He only got annoyed and he only got frustrated and he only got ticked off because he actually cared, right? And so it actually was a version of him looking out for me. Because if he didn't care, if he didn't want me to get better, he would have just told me to fuck off and to go sit with someone else, right? He didn't do that. I use Fibonacci as like a custom indicator just to map out my risk reward zones. There's a video that explains this and how I've set it up. But I just take the 0, the 1, and the 236, and it shows me basically where I'm getting 3.5 to 1 risk reward. So I want everyone's agreement here, right? with your pursuit of selfish improvement. Like, I want to see you guys all be successful, and I'm very like committed to seeing you get as good as you can as a trader. So I promise you, I've said this before and I will say this again, feedback is never personal. Just me being me. And so I don't want you to feel nervous, to feel apprehensive, to feel scared, whatever it is, to ask a question. Ask it, get it solved, learn, get better, and start making money. Don't sit on questions. That for me is more annoying because it delays your learning curve. So I want everyone, right, to feel like they can ask questions about trades. You know, if you're going to ask me questions about where do I buy market data, or things that are highlighted in the FAQ section, or like, you know, for you expect me to memorize your account balance, I simply can't do that, and I have no ability to be able to help in those situations, right? But if you want me to be able to help you improve your trading, then let me explain and answer your questions about the setups I'm taking. You just have to meet me in the middle, right? You have to ask questions and you have to control the variables you can control. So getting yourself set up correctly, right? Using all the tools that are available to you and going through all those videos. And then you have to ask the question. And I promise you, I might get annoyed, but I'll never get mad about answering questions that help you get better as a trader, right? My job here is to be as transparent as I possibly can be with my process. If you feel like you're missing a piece of information, then I am not doing my job well. And I want you to call me out so that you can get better. That's our social contract, right? I will answer every single one of your technical trading questions. And I will do so to the best of my ability. And I want you all to ask those questions and keep the main thing, right? We're all here to get better. We're all here to make money. We're all here to improve and become the best traders we can be. And if you are not singularly focused on that objective, that isn't your sole desire, it doesn't matter, right? But you have to want it. You have to want to improve. You have to want to get as good as possible. So be selfish in that pursuit, right? So is that a fair deal? Everyone understand what they've signed up for? Mm-mm. Mm-mm. Honestly, like yeah, like you're gonna solve your problems faster, right? You're gonna solve your problems faster. Answer those questions in the moment and get those problems solved now. If you're sitting on it for a week, you're sitting on it for a month, you're sitting on it for a day, you're going to forget those things. So it is a limiting belief to not ask like a lunatic, right? To not answer not get every anxiety answered, right? So get over your shyness. No one gives a shit, right? We've got a community here that is all committed to getting better. And I've yet to see any negative reaction from people when they see others pursuing their selfish best, right? So get over those self-imposed limiting beliefs and get obsessed over being the best you can be. Right? Just don't get me wrong. You can save your questions for your one-on-ones. You can save your questions for when we speak individually. But you're going to progress faster when you get those solved in the moment. How it feels in the moment is going to be different than how it feels when you're thinking about it a week later, 2 days later, 3 days later. Get it solved now. We spend most of our time here not trading, right? Even though we had 5 trades here today, you haven't been trading nonstop for 2.5 hours, right? There's a lot of time in between placing trades, and that's where the work is, right? That's where the work exists. The work isn't in trading. The work is everything else we do besides place a trade. Placing a trade is the reward for our work. So my stop loss, Antonin, was just the high of my entry candle, right? So if I'm playing a 3-min breakdown here at this 1048, my stop loss is just the high of my entry candle. All right? Because it makes that a lower low before pulling back. If it hadn't made that lower low, my stop loss would have been the high of my confirmation. So it's either high of my confirmation candle if it's a pullback entry technique, or it's the high of my entry candle if it's the aggressive technique. That's it. Every single time, right? I don't apply exceptions to that. Same thing every single time. You should know that. And we shouldn't allow the fear of losing to put our stop loss in a point where our trade is still valid, right? We want to get stopped out when our idea is incorrect, or more likely than not to be incorrect. And when we apply exceptions, right, to how we behave, then that also creates problems, right? It creates like an analysis paralysis. Oh, is this a trade where I push my stop loss up? Is this a trade where I push my stop loss down? Do I start protecting at half R? Do I start protecting at 1 R? Do I start doing whatever? And so when you're picking and choosing when to apply those exceptions, right, you just confuse yourself. You create anxiety. And then you basically make decisions that reward your fears, right? Or reward your anxieties instead of making decisions that are technically correct. My stop loss should never be random. It should be the same technique every single time. Because then when I go look at it, right, I go review my trade, I go study how I behaved, if I do the same technique every single time and it isn't working, the pattern that is costing me money will be obvious, right? And once a pattern is obvious and consistent, A, I can fix it, but B, right, it's easier for me to change my technique when I'm only fixing one thing, right? Okay, so every time my stop loss is exactly at my entry price, for example, right? So this would be a different technique. Enter a trade, I get separation, I push my stop loss to entry technique. If I did the same thing every single time and then saw that I kept getting retests, faked out, and then the move would happen, because I do the same thing every single time, it would be obvious, okay, I got to push my stop loss 5 points above my entry price. I got to push it X amount above my entry price, and then I'm going to stop getting faked out before it runs. Right? It's an easier conclusion to reach than trying to remember, okay, why did I change my stop loss here? Why did I change my stop loss there? And then we have like a random distribution over our ability to execute our technique, and we can't or don't notice the patterns that cost us money. At the very least, we elongate how long it takes for us to notice what we're doing well or what we're doing wrong. So the consistency in our approach just speeds up our learning curve and makes us significantly better. Good, Harold. If that's your objective, right? Ask questions, be selfish in that pursuit, get as good as you possibly can. That's the point of joining a service like this, is we're here to help empower you to be the best trader you can be. And that pursuit is inherently selfish to you, right? Me making money is cool, right? But it's cool for me, not cool for you. It doesn't pay your bills, right? It doesn't pay your mortgage. So be selfish in that pursuit of getting better. So depends on how you want to define system. This setup trigger, so this like opening range breakout technique, probably about 8 months or so, maybe 6 to 8 months. This candlesticks in volume technique, I've been trading it nearly 13 years. So how I look at what strong price action kind of is, and how I want to manage, yeah, what strength and weakness looks like, has been pretty much consistent since my hedge fund days. Same with my risk management principles. Those have been relatively constant. There's been a little bit of evolution, but it's been the same rule, right? Low of entry candle, low of confirmation, high of entry candle, high of confirmation. So that process has been the same. So like there's a lot of philosophical stuff that has remained really, really similar and hasn't changed too much. But then there's been like yeah, some different setup triggers. There's been some different yeah, I think really just setup triggers has changed. So the fund I worked for was in the UK. So I went to school in London for university and then got a job working for a fund there. It was a family office, so it was just the money of like a very rich, yeah, I'll call him a British patriot. He's actually one of the owners of Williams F1 racing team. So yeah, basically managed his portfolio, his long-term strategy, things like that. As for degree skills needed for hedge fund quant roles, the quants that I worked with at that company all had either like a PhD in mathematics, physics, or like engineering. Those tended to have been the type. Sometimes computer science. Those tended to have been the types. A lot of them had um, like multiple masters or multiple PhDs. They were honestly disgustingly smart and were all recruited from basically top schools. So Cambridge, Oxford, Harvard, King's, basically places like that. So they were very specific with who they targeted for those quant roles. Um, but yeah, I don't. I think that's more unique to the buy side. If you wanted to get a quant job on the sell side, so like with a bank or something along those lines, um, yeah, they would probably need to see like computer science or mathematics. They'd want to see that. They wouldn't probably care as much if you had a master's or a PhD, but then there would be a relatively intensive like recruitment process where they would ask you to code up something or do some sort of test or something along those lines. Yeah, before you got the job. Like the way that I ended up getting the job working there is twofold. So when I was still in law school, I basically started cutting class and was trading for a kind of like an OG prop firm. So like physical trading desk, monthly desk fees, things along those lines. And yeah, did that. Did that for maybe 8 months, something along those lines. Once I graduated, my boss there recommended me essentially to that hedge fund job. He's like, Michael, I know you want to trade equities. This could be an interesting opportunity for you. You should take a look at it. And so set me up an interview, put me through, and then I had to do a bunch of like personality tests. I had to do an essay on how I would manage a like crisis trade scenario. So think about it like, okay, we've got $40 million worth of Facebook, average price of 200. Now a flash crash and the price is $75. How do you maximize alpha on that trade? Or how would you manage it to prevent the fund from losing everything? It's kind of something along those lines. And then there was an Excel test. I never ended up actually using Excel at the company. And then it was like meet and get interviewed by all the guys on the desk. It was like a day of interviews in their office, where you got asked all sorts of questions, a lot of poker theory, stuff like that. And then go from there. Honestly, probably the reason I got the job was I talked about the guy named Steph. When he interviewed me, on my resume, it said that I like photography, and it kind of shows what a sick place it was, and maybe my sense of sick humor. But this was like right around the same types of, or same time as like the Charlie Hebdo terrorist attacks in Paris, and like when the Stade de France had like a bomb outside of it. And so he's like, so where have you taken pictures? All this kind of stuff. And I said, oh, I just came back from Paris. I was shooting people. And he's like, Christ, Michael, they're trying to find you on the news. And he like made that joke, and I kind of went along with it. And I was like, oh, like if you hire me, I promise to avoid all my legal troubles. Like what I said. And he just started laughing. And that's why I got the job. Like I proved that I was technically proficient, but that I could kind of roll with the punches and kind of fit with the culture of the team. So there's a lot of, yeah, just like basic competence type stuff. And then once you prove that you're competent, honestly, just like fit for the company, the culture was the most important thing that they cared about. Because everything else, they were basically expecting you to train and learn those things, which is what happened. But yeah, they just wanted to make sure that I'd be, fun to have a beer with, right? Or whatever it is. Sounds good, Antonin. See you tomorrow, man. So, quant trading would be a lot about like the way that it's gonna be a little bit of a challenging explanation. So, basically, what the quants at the fund that I worked at, their responsibility was to identify patterns in the market and to create signals based off of that. So the way that it worked for me, my job was trade execution. So I would be getting instructions that said, hey, buy $40 million of Apple at $232 or better. And so my job was to get a better average price than the price that was recommended as a signal. And so that would be how I'd be doing well, essentially, right? The way that the quants worked at the fund that I worked at is that we had a portfolio of probably 40,000 or so tradable names. And so if you had a scenario, let's say it would be a like interest rate hike or strong inflation data or whatever it is, right? Their job was to identify, okay, when you have strong inflation, these are the stocks that do well, these are the stocks that do bad, right? So it would be like, okay, let's sell banking or let's sell tech and buy commodities, or let's go buy Facebook, whatever it is, right? And so what their job would be is to code up all the signals so that they could sort those 40,000 names into their baskets of this behaves this way when this happens, this behaves that way when that happens. And so what we called it was basically optimizing their portfolio. So they were constantly running historical calculations based on data, based on signals, based on whatever it was, where we'd be positioning ourselves for those events. And yeah, like getting all of these names to communicate together requires a lot of coding skill, which I didn't necessarily have. So their job was to design signals that would dictate how we structure our basic portfolio breakdown. My job was to then execute those signals and to get better pricing to improve the alpha of the portfolio. That makes sense? They were setting up the theoretical best position for all 40,000 of our names. My job was to execute that theoretical difference. If you're ever interested in getting like a pretty intense version or breakdown of it, there's a book called Inside the Black Box. And that really breaks down like a lot of the trading systems and uh yeah, how a lot of these like quant firms are structured. From there, a lot of these quants, they would have a lot of work to do about setting up like connections. So the closer you have your data to the exchange, right, the sooner you get it, the less latency you get. And a lot of it would be, yeah, setting up these connections, right, improving latency, improving our ability to get data where a 10 microsecond difference could potentially be, you know, hundreds of thousands of dollars in extra P&L per trade. So it was a lot of like a technological arms race to get as close to the exchange as possible, and like building out servers there and stuff like that. And yeah, it was very, very crazy. Yeah, exactly. So they would do a lot of like forward testing. They would have sim accounts where they would be running different hypotheticals, right? All sorts of stuff. So yeah, it's really, really fascinating. And then yeah, my job was to basically talk to them, work with them, right? Learn why they were making some of these changes, and then execute. So it wasn't necessarily that like it was a quant and a trader paired, but I would always be in our Slack equivalent messaging them, hey, asking them, hey, would you expect this to happen? Yada yada yada. And yeah, that was sort of how I learned the market. And those guys got paid so much. Oh my gosh. Disgusting amount. Any other questions here, team? Anything else you want to go over? Hey, my pleasure, John. Hope you had a great day. Good man, John. Good man. Love to hear that. So, who's the leader in the clubhouse here for daily P&L? Who did 1K or more today? Anyone? Ah, it's still a good result. Hey, 800 bucks, Greg. Cannot complain about that. What could you have done differently to hit the 1K? I like that focus, Greg. Let me know if I can help in any way. Any other questions here, team? Any other questions? All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Same to you like always, right? If you have any questions, hit me up outside of market hours. Pretty good trading day here today. No complaints. And yeah, hopefully we can keep kind of building on some of this momentum. A lot nicer than yesterday, that's for sure. So let's keep stacking them up, compounding away, and putting ourselves in good situations. Yeah, no real complaints here today. So be back at it again here tomorrow. Same deal like always. And yeah, if you have any questions, hit me up outside the market hours, and I'll do my best to get back to you as soon as I can. Otherwise, have yourselves a great day, and we'll talk soon. Peace.